Let's review a file that we recently closed in Valley Stream, and this is a bank statement loan. So the client did not provide any tax returns, they only provided their bank statements. And let's go through the specs. And this is what the property looks like. And for them, the purchase price was $690,000 in Long Island, and they put down 20% down payment. And their monthly liability, this person already owned one property, so this is their second property. So their monthly liability will include their first mortgage, along with their credit card debt, installments, car payments, student loans, all that put together, it was $6,715, okay? Only one borrower on the file, and their credit scores was 745. And their household income was $387,000. Not on their tax returns, but based on their bank statements. We look at your bank statements, we see how much money was deposited each month, and we use portion of that according for your income. For employment, he's a construction company owner, and the property taxes were nearly $9,000 for this one, and home insurance was nearly $2,600 there, right? And they used a 24-month bank statement loan, and the interest rate they received was 6.490 and APR 6.765. So for this bank statement loan, right, you do need 700 credit score. He had higher than that, and you do need to put down 20% down payment. There are some negative things about this loan as well, which we always want to disclose. One is your PPP, your prepayment penalty. Meaning if you were to refinance in the first 5 years, you would have to pay some fee, which we'll go over in a few minutes here, okay? So let's review the CD. This is your final, closing disclosure that your loan officer must give this to you before you go to the closing table. So the sale price was $690. Loan amount after 20% was $552,000. The interest rate 6.490. And the monthly principal and interest $3,485. So you can see that can this amount change after the closing? No, but here's a red flag. Your PPP, prepayment penalty. If he was to refinance this loan or sell his house or get rid of this mortgage before in the first 5 years, he's going to pay nearly $14,000 in fees, prepayment penalty, okay? So as long as you understand this, then you want to go and move forward with this type of loan. There's no balloon payment, meaning there's no lump sum due at any time. It's a 30-year mortgage. And along with his principal and interest, there's also an escrow account, nearly $1,100, and it's going to pay for their property taxes and home insurance when that time comes, okay? So closing cost was $25,000, and cash to close, this is what he has to bring at the closing table, $129,000, okay? And we're going to give you a breakdown of that as well. So section A is your origination charges. This is what the bank or the lender is charging, nearly $12,000 there, right? If this was based on your income and you're not going with non-QM, then you're typically just paying the underwriting fees, okay? Next is your section B here, services that you did not shop for. These are your appraisal fees, your credit report, nearly $2,100 there, and that included their lender attorney fees as well, okay? Section C here, these are services that you did shop for. This includes your title company, and they charge around $2,500 there. Then comes your section E here. This is your taxes and government fees that your county, this is Nassau County is charging for this transaction, nearly $6,100 there, okay? Then you have your prepaids. These are the services that you have to pay for, your home insurance, $500 there, and your prepaid interest and your general property taxes there, nearly $5,000 there, okay? Your section G, this is your escrow account. This is your savings account that you will be paying your home insurance later down the line and your property taxes, and they're starting off with nearly $2,500 there, okay? And even though where it says section H, it says owner's title insurance optional, you always want to have this, right? You're paying $2,600, but you have peace of mind for the rest of your life or until you sell that property that your title insurance is going to cover you as well as the lender and yourself, okay? So total closing cost was $25,000. Paid before the closing was $700. He paid total down payment $138,000. And he put down $34,000 on the contract, okay? There was some adjustments, and he has to bring to the closing table $129,000. So bank statement loans is not for everyone. If you qualify based on your tax returns, then you go your conventional route. And if not, then you go through this route as your bank statement loans for non-QM. If you have any questions, please get in touch.